Hi, I'm Sarah Bunwell, the Assistant Editor of Engaged Investor magazine, and I'm here with Shah, Head of Business Origination at Pensions Insurance Corporation. We're here to talk about the outlook for the UK de-risking market. So Jay, 2014 has been a big year for de-risking with record-breaking buy-ins and buyouts. Why do you think this was?
Well, 2014 definitely was a record-breaking year. We had around 11 billion to 12 billion of total buy-ins and buyouts, and that compares to the previous best year, which was at about 8 billion. So a good 50% increase on the previous best year. The reasons for this, I think, is many schemes have been on that de-risking journey and they're coming to a conclusion. Many schemes, particularly large schemes, are holding significant volumes of gilts, and they're taking the opportunity to convert those gilts into a better matching asset, being a bulk annuity buy-in product, and seeing that as representing good value.
And looking ahead to this year, what can we expect the de-risking landscape to look like?
I suspect more of the same, with some changes at the margins. So I would expect there to be more of those large transactions that we saw in 2014. So in 2014 we saw the ICI pension scheme buying around £4 billion of bulk annuities. We saw the Total pension scheme. We saw the TRW pension scheme also do a large transaction. So there's now a track record of these large multi-billion pound transactions happening. We'll see more of those in 2015. We already see those in our pipeline. We will see a larger volume of pension schemes considering pensioner buy-ins, I believe. We'll have to see how pension schemes react to falling yields, which make, particularly if a pension scheme is mismatched, it's likely that their assets haven't moved in the way their liabilities have moved. So I suspect the bulk of the activity we'll see is in buy-ins rather than buyouts.
In terms of these big deals you're talking about, is this something that's relatively new to the UK market?
It's not new. I think we're just seeing greater volumes of them. So last year we saw 3 transactions over £1 billion, and actually they're now in the several £billion range. And I think, prior to last year we had seen those, but not necessarily every year, and maybe 1 or 2 every year. I think we'll just see them on a more regular basis and potentially becoming larger.
So April 6th is just around the corner and the pensions industry is gearing up for the new pension freedoms. What impact do you think that'll have on the de-risking market?
I don't think it'll have a direct impact. I mean, I think it will have some impact on defined benefit pension schemes per se. They'll need to consider, for example, how they're going to communicate the options to members, how they steer that difficult path between giving advice and giving information. What the literature might look like, and technical things such as how do they take into account potential selection factors and how they set their transfer value basis. So I think whilst it doesn't have a direct impact on DB pension schemes, a lot of things for trustees to consider.
From your perspective as an insurer, what is it you're looking to see from schemes before you take on a deal?
I think the process leading up to a transaction is quite important. Insurers like to have some comfort, some assurance that it's a serious process. There's quite a lot of investment made in getting from a desire to de-risk through to actually de-risking, both by the insurer and the pension scheme. So we like to see seriousness of intent, which might manifest itself in having good quality advisors who are experienced in running these processes, a joint working group, realistic expectations of things like price, and a collaborative approach between the trustees and the company in getting to a final decision, and a decision-making framework, I think is also important.
Shah, thank you very much.
Thank you.